it's a feature, not a bug, right? It's the community actively like doing this thing called burning their Hedron in this marketplace, right? So yeah, and then it's going to keep happening, that particular thing, right? So as more and more people get involved, they're going to realize, the benefit of being involved early. And the more people that are involved, the more early everyone's going to feel, right? Because then it's just going to keep perpetuating itself, getting bigger and bigger and bigger. The numbers are going to be bigger and bigger and bigger. I mean, like right now, the first wave of, well, shit, there's like 12 days left. Almost in an hour, it'll be 11 days left UTC time until higher yield boosts activated anyway for all the pools, including the Watsa pools. So the Watsa pools are going to get that higher bonus with the burned Hedron. More competition, and it actually is going to probably incentivize more burning of Hedron. Higher prices of Hex is going to cause more burning of Hedron. All signs are looking pretty good for the token distribution and dynamics of circulating supply members who are community members having the availability to participate to burn on their own volition and win at their own work, right? Respectfully of doing so. It's pretty neat to be able to participate in something like that. Or you don't even have to, right? You don't technically have to do a damn fucking thing. Like you can just go stake and be rewarded in Icosa, and that's fine. That's fine.
And Hexe, I already got my WhatsApp, but I'm trying to consider between Icosa and Hedron, or like which proportion should I have, like between these two? Should I have more Icosa? Should I have more Hedron? I just don't fucking know.
Well, here's the thing: is what I would do is I would make my Hedron very large, right? I'd make it as large as I possibly could. Now, the reason why this would be is, well, when more yield starts coming through, it'll make more sense. But the amount of Icosa that you can get is significant enough because the timelines, the minimum staking length is lower. You can use it to actually finish your Hedron staking ladder multiple times before your Icosa staking one is finished, right? So you could just end that stake, restake your Hedron, and then just add to the Icosa staking pool over and over and over again before any first 360 day anything would have happened with one of the bigger whales in the first place. Would have been able to even do one execution of any of their wallet stuff. You see what I'm saying? It gives you like a free run of time to multiply your Icosa staking while the whales are stuck at 360 day periods of their staking when they went into it, because they already had the advantage. You can run into their advantage. Increase your pool position faster if you know how to do it right. But feeding one staking pool into the other would not financial advice, would suggest that yes, you're smart to use both of them. But you have to understand where the weight of your value should go based on the timelines, just your minimum staking length in terms, right? So what is a billion Hedron? What is that? Like
$4,000?
What? For 1 billion?
Yeah, it's 4,000. And then if you put that into the pool, in the staking pool, you would get 0.003% of the pool for staking that, approximately. And I wanted to chime in, Executioner, just real quick, and then I'll leave. Watsas all day. And by the way, if you do the math on Watsas, like technically Icosa pool is a little bit cheaper to get into, but we understand that it will probably increase and you get diluted. Right now, if you want to be a dolphin in Watsas, at $3 per million, you need like 2.1 billion points in Watsas to be a dolphin. It only costs like at $3. It only costs a little bit over $6,000 of Watsas if you can find them at $3 to be a dolphin in Watsa right now. It's actually criminally undervalued.
Criminally.
After a 300% return in Watsas in terms of dollar per million points, it's still cheaper to get into the Watsa pool than the Hedron pool, percentage-wise. Your dollar goes farther with Watsas if you buy per million points. Even at $4 per million points, that would only bring it up to $8,000, $9,000, and that's still 30% cheaper than getting into the Hedron pool right now. And Hedron, you could maybe get diluted, you probably won't, kind of thing. But Watsa, you're guaranteed to never lose your position.
That is true.
So it's actually even at a 300% rate higher than minting, 2 months ago? Buying Wattses today at $3 is still a phenomenal buy, or even 4 even. If you bought some at 4, like, you're still doing.
You can't say 3%. You can say 3x.
3? Or, yeah, 3x. Sorry, I just woke up. But yeah, 3x. It was a 300% return. So now from $1 per million and 3, and then now you can even talk $4 per million, and you're still getting a really good entry point into the pool ownership.
Yeah, pool ownership is key.
True.
Yep. Just like all the rest of the pools. That's all I'm saying. Right. Like, so if you have high mintability of Hedron, instead of dumping it, then you have a place to put it. You can go put it into the staking pool that means that you have a higher availability of cranking out your Icosa staking pool yield during these events that happen. And people who own Wattses are going to be able to have bonus events that happen when people in their stakes that'll happen to them. And they might even have a higher advantage over everybody else, especially if they have multiple Wattses, that they would be able to mint their yield of all of these particular bonus events that'll be happening regardless of whatever happens every 90 days, right? At least in the Hedron staking pool, every 90 days, there's a potential of people ending their stakes and restaking that with a bonus, 5%, right? And 180 days for people with bigger bonuses. And then at the end of the year, so there's going to be certain events that happen on timelines for Wattses over every other pool, regardless of what happens. As soon as the eventuality of the stakers themselves coming to terms with their minimum staking length and they have the options of ending it, there's a percentage of people that will. Therefore, that means that that's an event for the Wattses pool, period. At least to a certain percentage, even if it's 1, I don't care. Still an event over every other pool that doesn't get that bonus. So the more participation for those types of things also means, more bigger events too. So it might incentivize the Wattses holders to be maybe some of the biggest pushers of the assets themselves.
Wattses is the Trojan horse of Hex. If you go right now to the OpenSea, go look at the trending page. Go look at the total volume of some of their quote unquote highest traded collections, and then go to the Wattses page. You're going to notice Wattses should be a top 10 NFT on OpenSea right now, which took up like 60% of the NFT market, and it's not even listed on the trending page yet because there's no artwork or anything. They're not sure if it's like wash trading or not. And I'm going to tell you, I've seen every single sale of Wattses, and I check the wallets. I'll look at the chain and be like, who's actually buying this shit? And like, it's a lot of rich people. I'll tell you that much. But still the cheapest pool to buy into, technically. Do not lose your position.
I will have this NFT at least for 15 years, man.
I'm hanging these things in my house, dude. I don't have artwork in my house. I want to hang up my Wattses all throughout my house with like LED displays and like that. I was talking to DJ and he mentioned that like he sees a future, about like people wearing their NFT art and stuff like that. And I did some like looking online, and that stuff does exist. Like a whole bunch of jewelers and stuff were like making jewelry so you could like put like your NFT picture and like wear like your NFT art. And he's like, you don't know where all these kids are going to go in the future. And he's like, you could see people like having shirts like with their NFTs that they own and stuff like that. And Wattses is one of those where it's like, oh yeah, you just wear a picture of that art, like, or whatever. They were already doing it on Twitter and shit.
Yeah, if you can put yourself in a position to have an NFT and have a following on like YouTube and be able to sell merchandise and do it in like a charitable sense, right? Then you could probably like make a lot of money doing that. But for now, it's, handle your tax stuff on the way back out to your bank and, deal with it that way. But eventually it may not be that way. You may have to have a tax professional in between as a middleman or be one.
Wouldn't you have to worry about taxes when you want to take profits back into your bank account, your regular bank account and stuff? I mean,
Yeah.
why the fuck would I do that?
Right, exactly. So you don't take out big chunks, in 1 year. You have like a certain amount that's livable income, and then you just take out small amounts throughout the months and then cover your tax at the end.
Why do people keep forgetting about TUSD as far as like avoiding taxes? I've heard that you can use TUSD because it flags it as something different than a normal asset.
Yeah, it doesn't reflect it as a crypto it reflects it as
A trust or something?
no,
think
it's not.
I
It's
think
not a
it's
trust, like a hedge fund. That's what it is. It reports to the banks like it's coming from like a hedge fund. So it doesn't even look like it was involved in crypto stuff. So you could just manage it away from crypto, even though it was crypto the whole time. If you handle it in a value of like short-term and long-term capital gains, respectfully, in that way.
Just seems like a nice little loophole that never gets talked about.
Just because you can use it, I think people still, like in the back of their minds, have this worry because you do have to KYC for it anyway. And if you use this loophole, and there's not like a definitive yes, it is okay to do, or no, it's not okay to do it that way, and then use it different just because you know that it allocates something different than crypto, right? Because crypto is a property and a hedge is money, right? Hedge fund is like potentially just money. So you don't really have to like worry about those types of tax. It could just be an income tax of a lot less money, right? Less than 10%. So I mean, I don't know. That would suck that if there was like legislation or regulation that happened and then the audit process was able to go back 7 years and you had KYC to all these things, like, and then realized that you owe a lot more tax because you thought this loophole was going to be congruent, but it's not. That would suck. Best case scenario, tactic wise, is to create a whole nother chain, kind of like what Richard's doing. So that way you are, you know, in the leading edge of all you need to do is to bring people over to the lead coin that they need to put money in and get your coin, like Pulse, right? Put money in, get Pulse. Put your money in, get Ethereum, and then you can do all these things, right? You can go gamble with it. You can put it in different staking protocols like Lido. You can transform your ETH to other types of assets and then stake that to get like rewards of all the assets that front end uses, like Lido or Aave, other types of things like this. There's all sorts of shit that you can do, but you have to buy ETH, or in this case, you'd have to buy Pulse. And having a cheaper network with a bunch of front ends that like have more than enough capability of being able to create all this stuff or have it all ready to go by the time it launches, at least. There's gonna be a lot of buttons to push and it'll be a lot cheaper to do over there. So I think it's gonna be like incentivizing for people to go over there and play around and use it anyway, especially those who already have a bunch of Pulse. Like it's gonna have to be distributed in some sort of way. So I think having all these front ends is kind of a neat way to do it. There's gonna be a lot of rug pulley bullshit that's happening of people trying to get your Pulse out of your hands because they understand that like the main asset for giving you access to the carnival is Pulse. Same thing as Ethereum. Knowing how all those protocols work and being involved with them and using them to the nth degree and to the full extent of the availability of having this one that adds with that one and this one, going down that rabbit hole is a lot of work. And probably at some point in time, you may have to, bring it all home and have your core set of assets that you don't speculate too much further from. And then maybe over a certain period of time, you can realize how to use these other protocols, and maybe that's how you distribute your way through. Because some of them aren't going to make it. There's going to be so many that you're really kind of taking a risk at which ones actually make it. So you thinking that you're losing like potential by not being involved in all this shit right now, like it may way better to know which ones are actually worthwhile of people to actually use and actually survive. Like you might have a cheating way of it because it's all speculative in its new environment. So I think that people aren't going to take it as seriously as like what I'm saying, right? And they might just go poke around, and even a little bit of poking around in it is going to make it look like it's going to survive. But going through a whole market cycle and then crashing back down, like it'll be very exposing as to which ones that should have survived and which ones shouldn't have. And then the few people that are actually using those particular protocols are going to be the ones that survive and had a really fun ride all the way up and didn't mind the ride back down for the next cycle to know that they rode a winning horse that survived the wave.
But yeah, overall, man, imagine like everything that happened on Binance Chain, all the crap and shit is also going to happen on PulseChain times 2, 3 maybe.
Yep.
Hope not.
Well, I mean, we're gonna, awesome. Like, of course, Photon. That's very sweet. We hope that they all survive and they all do very, very well. Of course, absolutely. But in the reality of it, like, they're going to have to be something miraculous that grabs the attention of the majority. And then we'll just see how many more majorities are allowed to happen with the amount of value that's actually there. And everyone else will just get squeezed out naturally. And until they can bring some sort of wave of adoption to them specifically as front ends that didn't make it through the first wave, then they may have a miraculous come up, which is a tough road to have to do that, right? But we'll see how that all plays out just through time. But I think that you can only have so much. Like, if there's a protocol that makes things easier, there's going to be one definitive one that does the best out of the 5 that could possibly be there. And who's to know which one is that, right? It'll come out in the data in the end, right?
Well,
If there's enough.
realistically, it's gonna be the projects that are easy enough for your proverbial grandmother to just push one button and get in.
True. Well, not necessarily, but true enough.
Yeah, for the most part, for a big part. The other part is I see when people get attracted to the PulseChain blockchain, even if it's by other starting project, it's gonna be so easy for Hex and for PulseChain itself, for the whole ecosystem to get. It's gonna be easy for pulling those people in. And giving the opportunity for those people to save themselves to rather buy some hex instead of jumping in the other project. Maybe they learn by losing some money with the CBDCs and the macroeconomic, the regulation and everything that's coming in. I think that the Richard Hart devs are cracking their heads around that, and Richard too. I hope he has enough information to work around all that stuff, because it's not easy. Yeah, you have to look 5 years ahead. What's the regulation going to be? How is it going back? Everybody, how is DeFi still going to be DeFi? People, the true DeFi will always find a way. The free market will always find a way around it. But it's I can imagine having a big head thinking about all these things. What if in 3 years the next bull market doesn't come or doesn't meet the expectations? Are you planned? Because good investing has always been like 10, 20, 30 years ahead. Just imagine if you have to wait, quote unquote, for nice price appreciation, 10 years, 8 years. Are you ready?
I think the indetermination is are they ready? Are they ready to make the cycle that we just went through, the last cycle? And then therefore everything's just going to dick around sideways until they decide, oh, money's failed, and now we're going to take on digital currency. And now, since we have to take on a whole new currency, that everything's going to dick around sideways and everything's just working out fairly is what the suggested understanding would be. So now everything's working just smashingly, right? Like, let's say everybody's debt's forgiven. People will just have money and they're able to use it however the hell they want. Everyone's happy.